It is Wednesday. Good morning. Thanks for joining me. We've got to talk about gold, silver, and oil today, gold and silver in particular. This just worked out so well. If you watched my video on Monday, or even better, if you're a subscriber and you've been getting my trade sheet and my daily analysis, then this is no surprise to see gold break above the upper trend line of the bull flag, long flagpole there, the triangle pattern indicating a flag. The moving averages on the 1 hour chart flatlined as we went through this consolidation pattern. Consolidation is perfectly normal in a bull trend or in a bear trend. You often see long periods of sideways action as the market meets areas of volume where buyers and sellers can get their business done. Once that process is over and the volume dries up, the market then vacuums to another level where it will search for volume, where again buyers and sellers can transact. Now we're doing that at the moment on a very small scale. I don't think this is going to be another bull flag. I think this is the beginning of a bull run. Why did we stop where we did? Well, that's obvious. My trend line here shows you exactly why we stopped exactly at that point. So there's a small amount of resistance, but I don't think that's going to hold us for long. I think this is just a quick pause, maybe a very small flag, and then we will continue higher in gold. For you subscribers, I'll give support levels where you can buy if the market does dip down. Nice breakout in silver as well. Silver's trying to catch up with gold. We had this upward sloping channel, nicely holding the 100-hour moving average and the trend line on the downside if you were buying through there. And then, boom, break up through the trend line was our buy signal. Now, the big reason why this is a huge buy signal for silver, as you know if you've been following me, is this downward sloping channel on the weekly chart, which goes back right to the beginning of 2021, 2.25 year old channel. It's really important. And we have soared through there. We held the channel trend line last month in February, and then we've broken up through there. I think this is the beginning of a big move in silver. Now, how should you have traded this? Well, you should have used a buy stop to enter order if you were not going to be sitting around waiting for the break. That's what I always do. I put a buy stop to enter order. If you want to know what that is, drop me a message in the comments box and I will explain. But I do not sit in front of the screen all day waiting for these breakouts. So I have my orders in there, which will alert me to the fact that we've broken up. And then I can decide if I want to add to the position, which is indeed what I did yesterday in silver. I didn't actually get a chance to add to the position in gold. I managed to buy a little bit, but the market went up so quickly, so I had to wait. And then when silver broke, I decided to jump in on that too. So I'm long gold and silver, and I'm going to hold these positions. Where could silver go to? We've got the 1.8% fib at around $25.25, which we're getting very close to. I don't think that's going to hold, or certainly not for long. Once we get up through that 25 area, we're probably heading straight towards 26.21, this little peak of that candle, 26.94, peak of that candle, 27.35. I wouldn't be surprised to see that. I think this could be quite a swift move. This gives you a really nice perspective on the monthly chart. You can see the channel, how nicely the price held the 200 and 100 monthly moving averages. This is a monthly chart. Now we've broken up, so we really could power ahead. We could be up at $30 in no time. The big resistance to get through now would be around the $26 area. That's 38.2% fib, dating all the way back to 2011. I think that silver really has started a good bull run. If you want to know where gold's going, you're going to have to sign up, I'm afraid. Okay, oil looking strong. We've got this gap, which has not been closed since the open on Monday. I'm just showing you the weekly chart like I did on Monday to give you some perspective. Again, my buy level down here at 64.5, 64.5 really did work so nicely, didn't it? And it was just simple. 38.2% fib, 200 and 500 week moving averages, big support level. Off we go. If you're still holding oil from there, you must be very happy. Now, why is oil struggling to move higher? It's this trend line that goes back to the beginning of December. I warned you about this on Monday. Actually, I thought by now we would have broken up, but we're holding. And look, we've got two dojis indicating, I would say, indecision. It's more of a consolidation than any sort of negative signal for oil. We've got overbought on the daily chart, but when there's no sell signal, I think eventually we'll get through $82 and we could really push up quite quickly in WTI crude oil. So you might want to have a buy stop to enter order just around the $82.20 area. And if you want to know what my targets are for oil, you're going to have to sign up to my daily technical analysis. I'll give you a link in the description box below if you want to check out the gold, silver and oil subscription. Okay, that's it for now. I'm going to record another video looking at some of the Forex markets as the dollar collapses this week. So look out for that one.